In this video, we're going to take a deep dive into supply and demand trading, and I will show you why supply and demand is a leading indicator, why it is much better than classical support and resistance. I will show you exactly step by step how to find the best trades with a lot of chart examples. I will also explain and lay out my number one setup that I use trading supply and demand after 15 years. And at the end, I have 5 things that you have to avoid when using supply and demand to get a better win rate and to improve your profitability. So let's get into the charts. I made quite a few videos here on YouTube about classic supply and demand trading and also how to find the best zones, and I will link them in the video description. In this video, I want to spend more time on the more advanced concepts, so we're not going to spend a lot of time on the basics. I will recap just the most important things. So a supply zone is a zone where we have seen a lot of selling, and it makes more selling in the future more likely. So the supply zone has been created here, and there are a lot of factors that go into the creation of supply and demand zones. So check the videos in the video description. Also, there's a link to this indicator. This is a supply and demand indicator that you can check also as well. And what is happening is that after the supply zone has been created here, it makes selling more likely when the market is coming back to the zone here and here and here. And the same goes for demand zones. The demand zone has been created here. It is a very strong buy zone because of what has happened here. And then the next time the market comes to the zone, we'll see more buying again. And then here you can see as well. And we can use this on all the markets and all the time frames, whether we look at Forex, crypto, stocks, commodities. We have a demand zone, the market comes back, and there's a high likelihood we're going to see more buying. Here as well, the demand zone was created, the market comes back and we see more buying. Here as well, we have a demand zone, the market comes back and we see more buying. This is different than support and resistance, and I will show you in this video how and why. And we will also learn why sometimes the market doesn't care about a supply and demand zone and what makes a supply zone more likely to hold versus to break. But now let's move on to the more advanced concepts. My most favorite setup when it comes to using supply and demand is the so-called trap, and I will show you how to use it and why it's powerful and how you can trade it yourself. So we activate the supply and demand indicator, and then you can see here has a supply zone be created. The dotted lines show you when the supply zone was marked on your charts. And then when the market comes back to it, one of the biggest problems that many traders have is that they trade it blindly. However, I would never recommend that because sometimes the market will just break through supply and demand zone and we have to wait for specific clues. And this is a very, very specific clue. What you can see here, the market rallied higher very, very strongly, broke into the supply and demand area, sold off a little bit, came back into it, and now made its way all the way above the highs here, all the way above the previous highs, all the way through the supply zone. And then what happens afterwards is really the key. We fall back immediately. You can see we have this long wick. The market did try to break out, but the momentum was not strong enough. The supply kicked in here. And then you can see suddenly we have strong selling going on. The selling brings us here back into the lows. We have a break and a retest. I have a few examples later for you how we trade this supply and demand retest. It's also called a dirty retest or a liquidity run. And then afterwards the market turns around. So those traps here, what does it tell you? It shows you that probably a lot of breakout traders have been waiting here to trade higher, and then they got in and the market reversed. Also, probably a lot of people had been selling here previously already. And where do they have their stops? They have it up here. So what is happening? We are fishing for the stops. Everybody who wanted to short got taken out here, and everybody who wanted to buy got taken out here. And this is contributing to a lot of freed up liquidity. A lot of traders are now trapped in their trades. The shorts have been squeezed here, the longs are now squeezed here, and then you can see the market reverse. This is a very, very important pattern that we're going to explore in this video quite a bit. And another way to use supply and demand is you can see here is a demand area that has been created here. If you get short after the trap, you can use the supply and demand areas as targets as well. They're working really nicely as targets, and very often you can see that the market doesn't always turn around at a supply and demand area, but if you're in a trade, use it as a target because very often the market just goes dead and goes sideways after it, and you're happy to be out here. Another example, we have here our demand area, and then you have a long trend going on. It's ideal to look at the market coming into a supply and demand area after long trending markets, because the likelihood that something is going to change in the market dynamics is also very, very strong. And what do we have here? We have our first initial push, and then we rally higher, and then we come back. And when we zoom in, what we see that the market did try to break out below the low, but within the next candle, we have a huge bullish momentum candle. So this is showing you that the trap has been activated here. If you see that the market tries to break out, be a low, and then immediately turns around and shoots high with such a strong momentum, that's a very important clue. If this happens at such an important demand zone, even better, because it puts the odds in your favor. And then the market rallies higher and back into a previous supply zone where it's a good idea to take profits. Whenever I make a video about supply and demand, people ask, how is it different from support and resistance? And let me tell you, it's very different. And a trader who knows about supply and demand is way ahead of a trader who knows about support and resistance. Supply and demand comes first, and then support and resistance is a lagging indicator. Supply and demand is leading. So let's take a look at this example. The market was in an uptrend, it put in a resistance, and we are back here. And a trader who only knows about resistance levels is only aware of this, right? And this trader is missing a lot, because if we activate the supply and demand indicator, you can see that above the resistance level, there's a huge supply level just a little bit higher. And that's very, very important to note, because if you don't know about that, you're going to structure your trades incorrectly. You're going to put your stop loss into maybe the supply and demand. You're going to get in way ahead of the supply and demand area. But very often the market is pulled into those supply and demand areas. Let's come back here. The supply and demand is a little bit higher, and now what happens? The push happens into the supply and demand area. Support and resistance traders will get in way too early and they will take the wrong position. But a supply and demand trader will know about this zone. This is where the support and resistance traders get completely screwed, and that's where they lose all of their money, because some of the resistance traders are going to sell here, right? Because they think the market is going to reverse and then they hit their stop loss. Other traders are going to buy on the breakout, but you never want to buy if you're in a supply area. So the breakout traders on the resistance will put their stop loss here, right? And then they will get screwed here on their stop loss as well. And that's why you see those liquidity runs happening around support and resistance and supply and demand areas sometimes. So you need to be aware of supply and demand, or otherwise support and resistance is really going to cause a lot of issues for your trading. Another example, we have a resistance here and it looks perfect, right? A lot of traders are going to wait here for trading maybe the breakout to the upside, or maybe here the move down from resistance. But activating the supply and demand area shows us there's a huge area here above it. And this is a concept called supply and demand stacking, which I will come back to in a moment here in this video, because it's very important. But a resistance trader without supply and demand is not aware of this zone here. And then what is going to happen? The market pushes into the supply area. The resistance trader, some of them are going to go short here, and then they get squeezed as the market moves into the supply area. And some of the resistance traders are going to go long here as they trade a breakout. And then when the market hits the supply and reverses, you can see how the market accelerates. Why is it happening? It's because a lot of those resistance traders are now getting trapped in their trades. And actually, looking at this, you never want it to be long, because there's a huge supply zone and we never go long before a supply zone. We wait for the market to react to the supply zone. And if we have clues like that, then you can see we have break and retest opportunities, we have breakouts, we have traps. And without supply and demand, you are often left wondering why such a good level has failed. But knowing the whole picture will provide you a very different view on the markets. All right, now let's come back to a few more trade examples and how to use supply and demand. So here the supply zone was created. The dotted line shows where the supply zone was first marked on the chart. And the market comes back to the supply zone. And what happens afterwards is really the key. First of all, we get a lower high, which is important finding here. And also, this is the key here. We have a low, and the low goes below the previous low. And it also breaks this flip zone. Previous resistance turns support, and then it doesn't hold anymore. And now we make lower highs and lower lows. And here is then a very nice entry signal, which a lot of my traders are trading. It is the dirty retest, liquidity run, whatever you want to call it. What happens is that a lot of breakout traders will get in here, and where will they have their stop loss? Here, right? And then the squeeze happens. That's why in the last few years, I would not recommend to be purely a breakout trader anymore. Or if you are a breakout trader, use very wide stops. However, this could be your only bread and butter strategy. You wait for the breakout, you wait for the squeeze, that happens here. So you wait for the market to fall back above the level, and then when the market reverses, that's then an entry signal. And you can see the market afterwards really collapses. And I've made 2 videos about dirty retest, and this is such a common pattern. After the retest, after the squeeze here, you will often see that the market takes off and in 1 or 2 candles makes a huge move. Why is that so? It's because there's so much liquidity here, there's so much position building, there's so much stops here, and once they get squeezed, you will often see a lot of pressure being released. Another example, we have here the demand zone. It was created here by the indicator, and then when the market comes back here, what does it do? It gives you the triple tap, and I made so many videos about the triple tap. You can check it on my YouTube. We have tap 1, tap 2, tap 3. We have this very short-lived channel. We have the breakout, we have the squeeze, and then you can see how is the market really moving higher. Very, very strongly. You can see 1, 2, 3, 4 candles, and we are back at the previous supply zone where it is a good idea to take profits if you take here the squeeze entry. But it all starts here with the supply and demand area. Sometimes you will be able to find the triple taps in the middle of nowhere, and they may still work out. But if you can find signals at a supply or demand zone, then this may increase your profitability quite a bit. Another example, you can see we have here the supply zone, the market moves into it, higher highs, then we have our flip zone here, and you can see how sometimes you will not be able to catch it because there's just so much pressure being released. So sometimes the market will take off without you, and that's totally fine. You cannot catch all of the trades, but this is a great confirmation that the strategy and the setup is really working because you can see how fast is the market collapsing. Within one candle, we are really tanking here. So sometimes you will not be able to catch it, but again, don't be discouraged. This is a great confirmation that you're on the right track because you exactly want to trade those situations where the market moves in one candle a lot because you don't have to hold your trades for a long time and you can make potentially a lot of profits in a very short time. And all started here after the move into the supply zone. Where does it end? At the demand zone. Here, very classic, and once again, this works really well. We have our supply zone being created here. Then we wait for the market to get into this. Never trade just because there's a supply and demand area. This is not going to work, but you wait for the market to get to your zone, and then you wait for the signal. You can see the market dips. We make a lower high. That's the clue number 1. We break through the low. We squeeze it here, and then you can see again, so much pressure being released. Those are really the trades that you want to look for. And this I would recommend to really focus on if you're looking for a strategy. This is something that you can really study. It's very simple, it's very straightforward. You only need the supply and demand zones. You can get the indicator, and then you look for those break and retest and the squeezes. And they come in many different forms, so it's a very interesting field of study. There's not only this type of pattern, they happen in different forms. So here we have the demand area, the market moved into it. If you have, for example, an RSI, you will see that this gives you also a divergence. So you could add an RSI or maybe another momentum indicator like the stochastic or the MACD. That will show you here the divergence. Then you have your flip zone, support turns into resistance. We break higher, come a little bit short of the retest, and then move higher here back into the previous supply zone. I have a few tips for you now that will help you avoid some of the common supply and demand pitfalls. And when does supply and demand not hold? And one of the reasons is when we see a reverse trap. What is that? So here we have a supply area, the market moves into it, gives us a nice rejection, and then the market comes back into it a second time. And I will talk about this as well. When is the supply and demand zone not valid anymore? But if you see that the market is coming back into the zone, don't trade it a second time. I would not recommend trading it the second or the third time. And here you can see that the market is now building pressure. It's making higher lows. Why is that so? Because now all the support and resistance traders will be aware of this level, and now the support and resistance traders are going to get into their trades. The supply and demand traders already made their money, they already made their profits. So the supply and demand traders are not going to take a second or third entry. The support and resistance traders are always too late. And here you can see we're building pressure, we're breaking higher, and then the resistance traders who wanted to short are now sitting on a losing trade. Very similar here. The market moved into the demand area. We saw a little bit of a rally. Previous support is turning into resistance. That's the last thing you want to see if you want to be long. So if you get long here on the demand area and you see that, get out of your trade. Take the profits that the market is offering. Don't try to force a trade. And then wait what is happening. You can see the market is coming back into the demand zone. We are making lower highs and we are breaking the level. This is a very bearish signal now. So here you want to take profits if you are long after the demand area because you can see support turns into resistance and then we see more selling. And then you can even think about reversing a trade if you see that the market is coming back into a support and resistance area for the second, the third, the fourth time. It makes a break more likely, as we're going to see in a moment. The next concept is called supply and demand stacking. And sometimes when you pull up a chart with supply and demand zones, you will see that there are two zones very close together. And what happens is that very often the market is pulling into the higher one. So if you have two supply zones, it will pull into the higher one. If we have two demand zones, it will pull into the lower one. And a lot of traders who are impatient, which most traders are, will not wait for the market to make the push. They see that, oh, there is a little bit of a reaction here. You can see the market moved into this and sold off a little bit. But knowing about supply and demand stacking, we are not going to be as impatient. We will wait, because there's a very high likelihood the market is going to make its way into the higher zone. And here you then have your trap, right? Here you have your breakout, and there is the real signal. The real signal happens usually on the zone that is a little bit further away. Like here as well, we have the supply zone, the market pushes into it, shows you a little bit of a reaction, but it's not until the market reaches here the higher zone. That's where you get the real signal. You can see we have the divergence here, lower high, breakout, and that's where the market rolls over. So supply and demand stacking is very, very important. Very often you will see that there are two zones close together, and waiting for the zone that's a little bit further away is usually the right call here. Also, don't jump in front a moving trade. This is good advice for supply and demand trading, but also for your real life. How does it look in a chart? So here we have a supply area, and the market moves into it. And at no point in time does it give you any signal that the market is slowing down. You can see we have a strong bullish candle, a rejection, still a very strong close, and then obviously the market breaks higher. So I cannot stress the importance enough to really wait for a pattern, for a signal, for something to happen at a supply and demand area before getting into a trade or even thinking about getting into a trade. Not always will those levels hold, and sometimes the market will just break through it. You have to really make sure that you have actual clues and that the market is showing you that something is happening here. Here as well, we have the demand area. Again, we have supply and demand stacking, but what do we have here? We have a strong candle, we have an even stronger candle, an even stronger candle. At no point in time did the market even give you a hint that there was more buying coming into the market. So there was no sign of a trap, there was no sign of deceleration, no sign that the market slowed down at all, and you're not gonna buy this here. You need to have some signal, some clue that the market is slowing down. And then you can see the market moved into the lower zone, supply and demand stacking, and here's where we're slowly getting a reaction. Consumed supply and demand means that we're looking at when is a supply or demand zone eaten up. So here was the supply zone created, and then the market came into it, showed you a reaction, moved into it again, showed you a reaction, and then the next time there's no more open supply left. So at this point, the more often the market pushes into a zone, the lower the likelihood that it's gonna hold. And again, we have a resistance now at this point, right? At this point, and here probably mostly only supply and demand traders know about this zone, but now everybody knows about it because you can draw your resistance level and then everybody's going to talk about this amazing resistance level and how it's going to hold and the market is moving lower. But that's not how trading works. If something is too obvious on the chart, if everybody believes that they will be making money, it's not going to work out. So it's so important to know about supply and demand and to have those zones on your charts, otherwise you're going to run into a lot of issues. Here as well, we have the demand area, the market moved into it, and then the next time the market moved into it even further. And we can see the reaction here is much smaller and much shorter. The more often the market is moving into a level, the lower the likelihood that we're going to see a reversal, and also the strength of the move is going to be much shorter. And now the next time, when the market comes into this level here, there's a high likelihood that we're not going to see any reaction, but the market is just going to sell off and move lower here because this has been fully consumed and there's no more demand left, or just very, very little. And that's it for the supply and demand masterclass. I hope you learned something. Make sure to check the link for the indicator in the video description. Also leave a comment, leave a like if you enjoyed this video, if you want to learn more about supply and demand. I look forward to hearing from you. Happy trading.